What lies ahead for our industry as flight operations around the world continue to grapple with the effects of the COVID-19 pandemic? From the National Business Aviation Association, this is Flight Plan. I'm Rob Finfrock with your trusted source for business aviation news. It's not overstating things to say we've never seen a situation like COVID-19 before in our lifetimes. And it's no secret that international business aviation operations have fallen dramatically over the past few months, with an equally precipitous drop in flights across North America since mid-March. But how long should we expect these challenges to last? Today's guest can offer some insights on that. Brian Foley is president of Brian Foley Associates, a consultancy that provides strategic aerospace research and guidance. Also with us is Doug Gollin, editor-in-chief of PrivateJetCardComparisons.com. Both Doug and Brian are also contributors to Forbes.com. Brian, let's begin our conversation with your impressions of how business aviation is responding to this crisis.
I think business aviation is responding just like any other company in the U.S., be it a restaurant or whatever the case may be. But, the first thing they're doing is just making sure, family and security is first and, getting that behind them. From there, they can move on to their own businesses and take a look at employees and how to keep them safe. Once that's looked at, then I'd say, you start going into hunker down mode, at least temporarily. You take a look at your liquidity. If there's anything you need to do to, reach out and get some additional sources, you might be looking at that. Any government programs out there that are worth responding to, you might take time to do that. And finally, taking a look at your own operation and staffing to see if there's any adjustment that needs to be done there in the short term, at least. So I think at this point, most of the folks have been through that already, and hopefully they're looking and awaiting for the exit from this thing.
Which areas of our industry have been most affected?
I'd say everyone has felt it. It's been sometimes uneven, though. The charter folks actually saw a big spike in business as there was a lot of last minute travel of people trying to get out of wherever they were and get home. So that helped them. But since then, that's slowed down a little bit, and it's slow like everyone else. We've seen some releases coming out of large FBO chains that's saying their business is down 60%-ish. Some, individual FBOs are saying they're down 95%-ish or so. Air traffic overall, activity is down, 70% plus. So anyone who is affected by business jet takeoffs and landings like FBOs, charter are probably starting to feel a little bit. The manufacturers of business jets, they've taken action, and almost all of them, with the exception of one or two that maybe haven't come out and publicly stated it yet, though, have taken a pause in production for now. So it's really an industry-wide thing, and I think folks are ready to come out the other end.
Doug, is that spike in charter travel that Brian just mentioned, which was followed by a decline, what you're seeing as well from your perspective in monitoring that industry?
Well, I think, similar to what Brian said, if you look at the Argus Track Pack statistics, private aviation in the U.S. was up 5% for the first 10 days of March, but it ended the month 30% off. And then their analysis is for April, it's going to be off 40 to 60%. I've had people after I wrote that call me and say they thought it was going to be off more than 60%. There's not a lot of places that you would fly unless you had a critical business meeting.
How has the aircraft charter industry responded to that?
The response so far, I think one of the key takeaways in the Part 135 market is the waiver of the 7.5% federal excise tax. So you're seeing a lot of the brokers and the operators promoting that you can fly more for less. You're obviously getting a 7.5% break. I've also seen some programs where they're reducing the fuel surcharges if they had a fuel surcharge, because obviously the cost of fuel has gone down. And then I think 10-hour jet cards are the new black, or 10 hours is now 25 hours. So whereas most of the programs used to start at 25 hours, there are at least a half dozen providers that have come out with 10-hour jet cards, obviously targeting those people who are, could be new to the market. So there's been a lot of initiatives on the pricing side. I'm not sure that at this point it's created extra demand, but a lot of marketing activity focused on price.
Brian, in March, you wrote for Forbes that, in some ways, our industry may actually have been better positioned to respond to an extended crisis from COVID-19 than from the closest comparison we can draw, which was in the aftermath of the 2007 economic downturn. Some of the areas you cited were improvements in company profits, as well as higher business aviation activity immediately preceding this crisis. We're speaking now a few weeks after you wrote that article, so have your views changed at all?
No, I feel even stronger that this isn't 2007 all over again. I mean, just take a look at the Dow Jones average in the U.S. Back in '07, there was just no floor in that. It just kept going down, down, down. At least the stock market fall has been arrested, at least thus far. I mean, things could change tomorrow or later today. But as far as comparing before we went into this downturn versus '07, you pointed out quarterly profits before this downturn were about a third higher than they were back in '07. Our stock market was two-thirds higher. GDP was higher. All of the economic metrics were improving before this happened, like manufacturing and job growth, consumer spending, business investment, all those key metrics. And there were some reforms done because of 2007 that makes bank liquidity and reduced credit risk less of a concern now than it was back then. The business jet manufacturers are a little smarter going into this downturn too. There was a lot of speculation back in '07. The backlogs were huge, but not very impressive because they weren't very sticky. It seemed like everyone could qualify for a loan to get a business jet, and maybe there's little speculators in the order book, but not so in the last one. The backlogs weren't as big, but they seemed more solid than they were back there. And in general, manufacturers, they have long-term memories and they remember about the overproduction back in '07. So they've been very cautious before this on ramping up production rates, and hopefully that stops them from getting any, whitetails or worse if some customers do cancel or defer.
It does seem that companies have responded more quickly and decisively this time around.
Yeah, no one waited long. And the other thing I'm encouraged to see is back then in '07, it was layoffs. It was pure cutbacks. But the key word now is that we see out there is furloughs, which generally means, hey, they're coming back sometime, and production pauses, not production, ceasing. So all of these type of words suggest a short-term event, and hopefully not as catastrophic as it was back in '07, '08.
Doug, you also shared recently not only your thoughts on how the segment is coping with the current crisis, but you also provided several examples of how business aviation companies are using this downtime to lend a hand in the various relief efforts we're seeing with COVID-19. Why did you feel that was an important message to convey to Forbes readers?
I'm fortunate to be a contributor for Forbes because it's reaching tens of millions of people and people who are influential. And I think, as all three of us know, what business aviation is doing now is what business aviation does all the time, which is really they're on the first line of first responders when there are emergencies. You've got great programs like the Corporate Angel Network, which flies patients who need cancer treatments. And so it was really just sort of a summary of a couple things that some of the companies were doing right now. But I think, when you look at a lot of the coverage that the industry generally gets, it's about the famous and the infamous. And there's often not a lot of coverage about how important it is to the economy as well, impacting all 50 states, and how many smaller markets wouldn't have the businesses that they have if they didn't have access through business aviation. So I thought it was a good opportunity just to highlight, some of the things that we all know go on every day, but to the person who doesn't follow the industry closely, they might not be aware of.
Admittedly, we're still in the early stages of this crisis, and it's impossible to predict with 100% accuracy how this might play out. But based on what you're seeing, Doug, what long-term effects do you expect our industry will experience from this crisis?
Well, I think a lot of it obviously has to do with demand, and the demand has a lot to do with what happens in the next couple of weeks with the virus. I think you could make a good argument that there's going to be I don't want to say a V-shaped recovery, but there will be an upturn. I think without doubt, this brought new customers into the market, at least until there's a cure for COVID-19. There's going to be an impetus that people are not going to want to be in crowded airports and on packed airliners. I think that a lot of people are going to value, or some people are going to value, the reduced exposure to possibly picking up anything. And the one thing you can't buy is health. And people are going to see business aviation as a way to avoid, the crowds in the airports and the TSA lines and on the airplanes. And then the other part of it is newcomers to the market who used it just for one-off or two-off trips. They're going to sit there and say, wow, what was I missing out on? So, I think there's reason to be cautiously optimistic and think, 12 months from now, there could be some good news for the industry.
Brian, what do you think?
As Doug pointed out, we've been trained as a society to stay away from other people in a very short time. So we have this new behavior to overcome that just doesn't go away in a day. So I could make the case that business aviation will come back a little sooner than the airlines. Certainly those in the industry will take the demand as it comes and do what they can with it. Regrettably, there is a recession speculated to be going on now, which is a pretty safe bet. Probably a double-digit percentage loss in growth. And that's going to have an impact on balance sheets, on personal portfolios. So those that might have been able to afford it before might not be able to now, at least for the time being. So even though there's good things to say about business aviation coming back strong, we have to sort of wait for the caboose to catch up as far as earnings and personal portfolios. Hopefully it'll be a short-lived recession and not more than a couple, 3 quarters, but that's sort of hard to predict. But certainly business aviation will be well poised to take advantage of that.
Another thought just occurred to me while speaking with both of you. One advantage to business aviation that we're all familiar with is the ability to travel quickly to distant locations and meet face-to-face with clients, prospective customers, or with employees. Over the last few weeks, though, we've all had to adjust to an environment where online conferencing is probably a much bigger part of our lives than perhaps it was before. Doug, do you see potential long-term effects from this new normal and how companies use business aviation going forward?
Yeah, I think actually it may broaden their viewpoint on business aviation. I think companies are going to look at that and say, can we cut out some of that travel expense and do more of these things online via video conferencing? But I think for top executives who have to be there for, important meetings, I think there'll be a shift for more of those. Everyone in the industry knows it's about getting to important places, getting to remote locations, factories, plants, visiting clients for critical meetings. You can't inspect a plant floor, from the internet. So I think overall, business aviation should end up on the positive. I think it's going to be the airlines that are going to get hit harder.
Brian?
Maybe it was alluded to before, but I see kind of a 2-phase recovery. And the first one is people just getting out to see their families again or go to another house or whatever they do, go recreate somewhere. And maybe not so much the meetings initially. A lot of that might still happen by Zoom or one of those others. And it's really not until there's some kind of a vaccination for the current virus that people are going to pull a stops out and say, hey, let's go see all these remote locations and meet with people in large groups. And so it'll be kind of a 2-phase approach. But the need for face-to-face will never go away.
So Brian, what other advice would you like to share with the business aviation community as we continue to navigate this situation?
2 things. First, there are clearer skies coming, and we kind of have a built-in crystal ball. I mean, you can look over to China where this thing originated, and They recently had a holiday over there. Bookings are up, 50% over the weekend before. Train reservations doubled. Hotel bookings are up by 30%. So, and people are even, making plans for vacation later in the year. So there is an end to this. South Korea, similarly, they've seen their cases come down, and they're moving towards a recovery. So it's on the way. Lastly, I'd like listeners not to forget about their associations, their trade associations. These folks have been out, pulling for you, putting their constituents first, and making sure you're whole. But we see the news of canceled events and other things, and I'm sure we have to remember these folks once we get on our own footing.
I'm sure everyone at NBAA and the other aviation groups appreciate those sentiments, Brian. And Doug, what advice would you like to share?
Travel and tourism globally accounts for 1 in 10 jobs and over $8 trillion in annual GDP. So it's an important part of the world economy, and it impacts business aviation. So I would say, as much as we can encourage people to do what they're comfortable with, get out and travel, get back to the routines, take the precautions that you deem necessary. But, sitting around is going to make the economic dip longer. There's a large section of the economy from, hotels and, as Brian mentioned, FBOs and a lot of jobs, restaurants, bars, events, all the people. When you think about these conferences that you mentioned that are canceled, it's not just the people. There's the people who build the booth and take the booth down, and all of those jobs are basically on hold during this crisis. So as much as possible to move back to what was there before is going to be good for all of us. And as Brian pointed out, we came into this with a pretty strong economy. So I think within the industry, as much as we can lead by example, that's going to be a good thing for everybody.
Brian's article, Business Aviation May Be Better Prepared for the Coronavirus Downturn Than It Was for the 2007 Financial Crisis, was published on March 17th, while Doug's piece, Dire Times for Private Jets Brings Out the Industry's Best, ran April 3rd. You may find both articles online at Forbes.com. And that's the latest from the National Business Aviation Association. Remember, you can subscribe to all Flight Plan episodes at Apple Podcasts and the App Store, wherever you find your favorite podcasts, or download them from nbaa.org. I'm Rob Finfrock, and thanks for listening to Flight Plan.